Yo, what is going on, guys? Actually, welcome back to the channel. Welcome to the channel. If you're new, today was a great day towards the end of the day, at least. But there are a few weird things, wonky things going on with AMC and APE, and we are going to be going over that in today's video. All you have to guys do is smash the like, hit that subscribe button. Let's get into it. Alright guys, so the first thing I wanted to bring up before we get into TA is bring up the Volkswagen squeeze, and really any squeeze in general. Most of the time, you have this creep up before a squeeze usually starts, and if you take a look at GameStop and AMC, they kind of had the same exact thing play out, and they're lining up with it again, okay? This is GameStop's chart, you guys get what I'm looking at there, and then AMC is also following the same exact thing. So when it starts creeping up, this is when you can kind of tell if there is going to be a reversal in the overall long-term trend of things. Now, real quick, I wanted to go over this. Here is the breakdown of CBOE call. They allowed the listing of options in unknown exchange, hidden apes, challenged the legality of options chains, so they had to remove it. CBOE has 24 hours for legal rebuttal. So as many of you know, APE options chain was removed today by several brokers, and the other brokers who have it listed still, you can only look at it. You can't actually buy contracts, sell contracts, etc. Here's what's interesting. Shout out to Edward, and I don't know, whatever, however you pronounce that, for putting out this tweet. Direct Edge, owned by Bats, involved with KCG Knight Capital Group, are in cahoots with Citadel and Goldman Sachs since 2013. Both have representatives on the Direct Edge board and bringing them into ownership structure of the new entity. So this is pretty interesting. You can see right here, Virtu Financial Inc., customer wholesale order flow, expand Virtu's growing agency execution business, Virtu and KCG's superior algorithms and proprietary analytical. And then you go over to the next picture, you can see CBOE right here, CBOE Bats. And then you go over to the next one, you can see Citadel tweeted this: as a part of our virtual APAC Financial Leaders Forum, CEO of CBOE Global Markets, Ed Tilley, discussed the significance behind the performance and resilience. You guys get it, right? So all of these indices are in bed. Goldman Sachs, Citadel wins seats on Bats board through merger. This is interesting. So somebody challenged the legality, and that is why the option chain is removed. It's temporarily removed unless they win this legality. I don't know what it was. No one knows at this point what this was, but this is the reason it was removed for now. If, right, just a tinfoil hat theory, if AMC and APE were to run, or APE were to fly, the fact that they can't hedge with options, or market makers can't control it, they can't make money. It's kind of interesting that one of these indices challenged the legality of this, unless this was someone on the ape side of things, right? Because that would make more sense. Retail to want the options chain taken off, that would make more sense. Although options chains are allowed, derivatives are allowed on dividends. Depending on the legality of this, we could win this over, depending on if this is retail or someone from that indice. So the next thing we are going to be going over is Robinhood and other brokers flatlining on APE, right? The chart just going flat. Several people were going over this on Twitter, some on Discord, I believe, and people were just freaking out. Why is this happening? Why is this happening? As you all know, Robinhood is ass. That shit is trash. So Robinhood, I'm not surprised. But the stuff going on in the background is what that is to pay attention to. It's pretty interesting. I think something is going to happen extremely soon. This article was also flying around, Gary Gensler resigning. He is not resigning, but Forbes did put out an article explaining how he does not do enough for market transparency, arbitrage, short selling, yada, 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 and they think he should resign as well. So this is an interesting article as well, but I just wanted to put it out there that Gary Gensler is not resigning, and cover everything today. The next thing is Vanguard is showing 51.68 billion outstanding shares for APE and the market cap of 368.49 billion. This is absurd. If you guys don't know, outstanding shares for APE is 516, or at least the free flow is 516 million. Outstanding shares is absolutely nothing close to 51 billion, and the market cap is nothing close to 368 billion. This is absurd. Again, glitch every single day. We're going over glitch after glitch after glitch after glitch. My only theory is that there was millions, if not billions, showing from this glitch, right? Synthetic shares in AMC that are now everything's transferring over to this dividend, and there's issues. There's issues. Everybody's gonna butt heads, and if you haven't gotten your APE, you guys need to contact your broker. If you have contacted your broker, you still can't get them. Please, please, please join the free Discord and send me screenshots and screen recordings so I can attempt to help you out with that. Now, the next thing is the implied volatility on AMC. In case you guys were assuming to trade this, the implied volatility is getting down to a decent level at this point, but I do think it's still going to come down a lot more. Every time it has these large spikes, it tends to come down a bit for a while. So just be careful with trading options. They are a little bit expensive right now. Just be careful on that. Now, we're going to be going over a little bit of the TA side of things. So let's jump over to the 5-minute chart. And usually we're on the larger time frames, but I kind of just wanted to point this out. So we are in this falling channel type of bullish setup. Usually you see ping-ponging back and forth in these channels until they break out to the upside. This is what you normally see. But again, normal setups don't usually occur with AMC. Usually they play opposite, but for now, we will be going with the bullish setup, right? It tapped here, tapped here, tapped here, tapped here, and then all the way through this, getting this follow through, and it's touching along this trend line again. It got rejected 1, 2, 3, and it's going for a fourth touch. AMC usually breaks out on a fourth touch, but be very, very careful, okay? The reason you have to be very careful is because if this were to drop back and get rejected off of this line again, there is a major fall point, about a 17% fall point if it were to stay in this sort of pattern. And with that being said, it's going to be very volatile tomorrow. The Fed is having a meeting. The Fed is speaking. So the S&P 500 is going to make a large move. AMC is going to make a large move. I personally wasn't really bullish on the wasn't really bearish on the S&P 500. I was more bullish on it, but I want to bring this up in 1 second. As for AMC, guys, just be very careful right here. You could get a disgusting breakout. I'd wait for confirmation over $10 before I played any sort of options or anything along that nature with AMC. As for APE, if we jump over to the APE chart, you'll see that it went back into the 382 fib zone, and I think before you get a breakout, it has to at least come back up to the 0.5, which is, I'm sorry, it broke down to the 236. It is now, it has to break into the 382. Okay, so that's about at $7.10. I'm waiting for that to happen. Now, I wanted to talk about the S&P 500 real quick because the S&P had an absurd day. This thing just continued to rip, and it closed around $419 and a half-ish. Now, it almost filled this gap, but not quite. There's a gap up to about 421.50, and I do think that will fill. And besides historical factors and historical charts, I do think the S&P 500 looks bullish. And depending on what the Fed does tomorrow, it should look good. But with the 2008 and 2010 chart overlaid, right, in orange right here, you will see that it does come up right around the same spot before getting knocked back down and getting pushed back into bear territory. So if you guys are one of those people who have that theory that this is a extreme comparison to 08 crash, then this is essentially what you're looking for bearish case scenario. I don't know what the Fed's going to say tomorrow. Again, it could just contribute to high volatility to the upside, high volatility to the downside, and I think AMC, APE are going to feel the contrast of that. As for the numbers real quick, 450,000 shares available to borrow on GameStop, 49% free float DRS with a 13.5 cost to borrow fee, 680 call contracts in the money, 21,000 put contracts in the money. Although if we get running 93,000 call contracts out of the money, which is nice. Short exempt 16,000. Came down a little bit, but still extremely high. As for AMC, here's what's interesting. Only 100,000 shares available to borrow, 23.5% fee. So the fee went up 2% again. This usually stays extremely low, around 7%. Yesterday it went up to 21 point something. Now it's 23.5. I think brokers are actually starting to expose synthetics. There's something going on behind the scenes, and if right, the more this creeps up, the more probability we're going to run in the very, very, very close future, especially with only 100,000 shares available to borrow. However, short exempts dropped a lot. They are still extremely high at 441,000 for short exempts. Overall, guys, I think that is going to do it for the video. I don't want to make this too long. I want to jump back to the AMC chart real quick. For anybody still watching the video, feel free to click off. But I kind of wanted to talk real quick about the longer time frame perspective. Initially, there's two things you're looking at, and it's this right here. This is what we could be at in terms of a longer perspective, a longer standpoint, and we could be getting this rip mid to late September, or you could be seeing something along the lines of this, and you could be waiting until late October before a rip. But essentially, I'm going to be leaning toward mid to late September for a rip on AMC, and even earlier on GameStop, probably still mid-September, especially if the S&P 500 runs. For anybody who bought calls in GameStop, I guess I was a week too early to it, but I do think GameStop is still going to make a major rip just due to how the cycle is playing now that we've been tracking. It just has to find a bottom. I thought it would have found a bottom earlier, but I guess not. But essentially, I am looking for GameStop to have a rip come late September, as well as AMC. That could be a point where they can both rip. So that is what I got for you guys for this video. I really hope you appreciated watching. I hope the quality was good, and I hope you've taken something out of this video. I put the time in to make this video so you guys can watch it, so please smash the like button, share the video to other people, hit that subscribe button. Also, guys, drop a comment down below. I try to answer everybody's comments. I want to start a new thing really quick. Drop a ticker down below you want me to analyze and tell you if it's a buy or sell, not financial advice. And I'm going to make YouTube shorts on each and every given ticker. So just have post notifications on, and I will review your ticker. That is it, guys. I love you all. Lottery Stocks out. Also, make sure to get 10 free stocks by hitting the link pinned in the top of comments and linked in the description by just depositing any amount. Sign up for Moomoo. You will get access to trading options, level 2 order book for free. You can buy and sell trade APE on there, and you can get further expiration for the options chain and see other exchanges. So there's a bunch of benefits to do so, and it's free. Love you all. Lottery Stocks out.